How's it going, investors? I'm Ari and welcome to my channel. Now, if you are brand new here, I want to keep this one short, sweet, and to the point, and sharing with you that this channel was created back in 2019 with the goal of hitting $100,000 to my Vanguard brokerage account, and also just showing you through how simple investing actually is, as long as you have a process and stick to that process throughout the market's ups and downs. Of course, my account is now sitting at $103,804.64, which is actually down considerably given all the recent volatility. But either which way, I've decided to continue on this track with all of you with the intent of providing you with market updates and all the discounted stock opportunities that come about that you may be interested in investing in. So that leads me right to today's video, in which I want to get to a market update just after Powell spoke. Of course, the entire market shook, and then I want to get right into 3 dividend stock opportunities that I'm seeing as not only undervalued, but perhaps ripe for picking for your own personal portfolios. Just before we dive in, do me a massive favor here and tapping on that thumbs up button, as it greatly helps me out in growing this channel. And of course, if you haven't already subscribed, definitely consider doing so. And with that being said, let's get right to it. So whether you knew or you didn't know, well, you're about to know, Federal Reserve Chairman Jerome Powell spoke this past Friday at a massive annual conference known as the Jackson Hole Economic Symposium. For the entire week, investors were anxiously awaiting his remarks, as he would surely clue us all in as to how the Federal Reserve will ultimately move forward with hiking interest rates. Now, if you were following my channel pretty avidly, video to video, I shared that Powell is likely to simply state the Federal Reserve will continue to fight inflation, which is exactly what he did. However, he also shared that the Federal Reserve will continue to raise rates and keep them as high as they need to be until inflation is actually under control, which investors didn't really take well to.
We'll learn more about this morning, the state of the economy. With high prices on the minds of all people, everyone's anxious to hear what the Fed chair has to say as he delivers a highly anticipated update on the economy.
While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our...
The move's meant to slow the economy and squelch inflation, but
they will also bring some pain to households and businesses.
The uncertainty fueling a sell-off on Wall Street.
To the economy, and the market's taking a nosedive after a warning from the Fed chair about the tough road ahead and the efforts to combat inflation.
All that momentum built up across the past couple of weeks totally knocked out. The Dow ultimately slid by 3%, the S&P shed 3.4%, and the Nasdaq plummeted by 3.9%. While yes, it may seem pretty terrifying, I'm sure, for newer investors out there amidst these market conditions, I am actually advising each and every investor to consider buying, as long as you're looking at longer-term value stock opportunities. After all, there is just nothing better than scoring high-quality stocks while they're trading at discounted share prices, which leads me to the very first stock on the list today that I don't want to bore you with because it's been mentioned on this channel before, but investing isn't supposed to be fun, it is supposed to be about making money, and I recently just picked up about $1,000 worth of this company myself. So without further ado here, we're going to be talking about Stanley Black Decker, ticker symbol SWK, the world's largest tool manufacturer, not only within the United States, but on a global scale. Now, after its founding in 1843, it has grown operations to 50 manufacturing facilities within the United States and 100 more outside of the US. Its market capitalization is coming in at a whopping $14.05 billion. And while every investor is getting excited about investments like Home Depot or Lowe's, I'm looking at Stanley Black Decker because it's the supplier to those two retailers, and it completely outbeats them when it comes to dividends, but we're going to get to that in a short second here. Given the current economic backdrop with high inflation and now interest rates likely to rise, Stanley Black Decker has taken a tremendous hit since the onset of the year, with its stock down almost 50%, whereas it was once trading for around $183 per share, it is now trading for $95 per share, with a PE ratio coming in below 20 at 15.5. Now, hedge funds may be selling out of their position with Stanley Black Decker, But I feel what matters even more here is just taking a look at what insiders are doing, and they've actually been rallying around the stock, scooping up over $1.5 million worth of shares over the last few months, while everyone else has been selling, indicating the insiders believe their company is undervalued. Now, for a company with multiple top-notch brands like DeWalt, Craftsman, Stanley, and Paladin, I'm right here with those insiders, standing firmly behind these brands. Therefore, I went ahead to actually purchase 10 shares myself for $94.79 each, and will have no problem waiting for this stock's rebound, given Stanley Black Decker is a reliable dividend king with 54 years worth of dividend increases. The dividend yield coming in at 3.38%. Better yet is just the reward of patience in and of itself, as the stock share price shoots back up. Analysts are confident it's going to come back up to $114.60 per share, but with a higher target share price of $122 per share, I am all in on Stanley Black Decker. Moving right along to our second dividend investment for the day. It is not only a stock that I have never mentioned before on the channel, but quite an interesting investment to say the least that I've never even thought about before. That's neither here nor there. I want to talk about Scott's Miracle-Gro, ticker symbol SMG, which was founded back in 1968 and focuses on miraculously growing that dividend. No, I'm just kidding, but not actually, because I think you're going to be pleasantly surprised, just as I was when we're taking a look at their dividend. But Scott's Miracle-Gro focuses on the manufacturing and selling of consumer lawn, garden, and pest control products with a sizable market capitalization at $4.19 billion. As its current share price is down on the year by roughly 50%, where it was once trading for $161.14 per share, but now down to around $75.85 per share, which, if that spooks you, allow me to console you with some of the economics behind this whole deal. Interest rates have been and are continuing to rise, therefore home sales are likely to continue to fall, and likewise with new home construction. Now ultimately, homeowners aren't necessarily jumping on the gun here to invest in their lawns as they tried to penny pinch during these uncertain times, which leads me to the big question: what exactly are the bigger guys doing, like the hedge funds? They've actually been buying into Scott's Miracle-Gro in addition to insiders who have been doing the exact same thing. However, I am now bringing this alarm sounding news to your attention. The company has a negative 15.6 P ratio, meaning they're not necessarily bringing money in. Therefore, do take extra caution here, but all in all, I'm taking a look at these economic conditions, which are in fact near-term troubles for a longer-term investor like myself. As for analysts, they foresee growth when it comes to the stock share price rising back up to $87.50 per share. Now, until it gets there, we as dividend investors get to appreciate this miraculous dividend yield coming in at 3.57%. And finally, our last dividend stock, another company that I have never mentioned before on the channel, but I was also just pleasantly surprised with. It is Argo Group International, ticker symbol ARGO. It's a Bermuda-based international underwriter of specialty insurance products in the property and casualty market. Now, right off the bat, I'm going to share with you that it's not a stock I would typically look into, but bear with me as I go here. Argo Group was founded back in 1948 and has since built up a market capitalization sitting at $727.72 million. Not quite as large as some of these other insurance companies, but what intrigued me is this hedge fund Enstar Group recently purchased over $62 million worth of shares, as the stock fell 60% year to date from $57 per share down to around $20.69 per share. Now, analysts do foresee upside potential with the forecasted share price at $35 per share for Argo Group, which comes on top of bullish blogger sentiment, positive news sentiment, and overall favorability from retail investors. Not to mention, at least on TipRanks, investors using the platform seem to be buying more shares worth of the company, all of which is very exciting. But now, here's what really got me excited. They have a dividend yield coming in at 6.1%. Investors, that's all I have for you today. From Stanley Black Decker to Scott's Miracle-Gro and Argo Group, the three dividend stocks that I've been looking into rather recently, and of course, when it comes to Stanley Black Decker, actually went in to execute a trade on it. But please do your own due diligence following all of my videos, as I am not a financial advisor. However, let me know your thoughts by dropping a comment or two down below in regards to these stocks. Also, I'd be curious to know if you like this video and you want more videos exactly like this one, revealing more stocks that I haven't necessarily talked about, Or would you like me to continue to talk about the stocks that I'm actually investing in or planning on investing in? Do let me know all those comments down below. Now, just before we actually conclude for today, go ahead, tap on that thumbs up button if you haven't done so already. And of course, join me on this journey by subscribing. Now, investors, until the next video, I will see you all there.